So trading tip of the week, trading plan. Now, do you guys all have a trading plan? What is a trading plan? Quite simply, it's a set of rules to keep you safe, and hopefully it will help you develop consistency. You know, that's what we all want, and that's what pro traders have more than most, is consistency. Now, for me, a trading plan has two parts to it. And the first part I would say is the financial area. So, you know, you've got to think to yourself, how much of your capital are you prepared to risk? And of course, you know, you don't want to make that a massive part of your capital. You know, you need those reserves. So be careful how much you consider for that. And of course, you know, how much you're going to risk in each of your positions. You know, you've got to maintain that risk reward level. And of course, maximum drawdowns per trade, per day, per week, per month, per quarter, etc. So there's a lot to take in there. But, you know, that for me, that's part one, is the financial element of trading. The second part, which is much deeper, it's much more around the trading itself. And of course, you know, with a trading plan, you've got to have a solid trading strategy anyway. Just doing things the same day in, day out, if you haven't got a solid trading strategy, it's still not going to work for you. So hopefully you're developing that trading strategy, or you already have. And that is going to help you. And to help you even more, you create a routine. You know, you read your reports, you look at the data, you do your analysis. And of course, then you come up with, you know, your ideas and your levels, and you know, that's part one of the trading element. You know, limiting the number of trades you do, and also the number of products perhaps as well. And of course, no revenge trading. You know, if you have a loss, just accept it. It's a business cost, and then just look for the next opportunity. You know, we all take losses. So, you know, never sort of fear them, just control them. And of course, then setting rules, restops for the day. You know, when it comes to having that control for stopping yourself out on the day, you should also have a set of rules around when to stop trading when you're in profit as well. And again, you know, reach out to me. I can help you with all of these areas. We're always available. You know, I'd love to help people. And you know, if you want to do a session with me, whether it's a couple of hours or a day or something like that, I can really help you to develop these much faster than you can on your own. So we're going to move on to technical analysis now. And as usual, I'll just give you a little reminder here. So when we look in the right axis of the chart, the black numbers are support and resistance levels. If there's a blue number, and unless it's a pivot, that is going to be the last traded price that happened on Friday. Brown numbers are breakout levels, and claret numbers, they're just sort of horizontal lines that I've put in where I can either see support or resistance, or I feel that's where it is, or it's based on double or triple tops or bottoms. And then Fibonacci colors are on the right. So as usual, we're going to start with the Dow daily. I've got resistance here at 31,292, and then support at 29,737. But for me, there's also that other downtrend line there, which is going to be quite pivotal for the opening, because it's at 307.99. Now, please remember, first, all of this is based on futures. Secondly, I record this late on a Sunday, but before the markets reopen, so that we can get it out to you early Monday morning. So it helps you to set up for next week. When we look on the 30 minutes, so Friday, the markets had a good recovery. They closed at the highs on Friday. So again, a little bit of investor confidence coming in, but is it going to be short-lived? So I've got on the 30-minute, I've got resistance at 31,202 and support at 30,877 and 32,56. With the S&P, the top one's just a reminder. It's nowhere near there at the moment, but it's a key level for me. I loved it when it got up there in August. It gave me a great opportunity to buy put options. If it gets up there again, I'm going to be doing the same thing for sure. But, we're quite a way away from that at the moment, so it's going to take a bit of time. But I leave it on there as a little bit of a reminder. And below that, we've got 39.12, 38.19, and 37.77. On the support side, 35.88. Moving on to the S&P, on the 30-minute, we've got 37.73 as resistance, very much where it sort of closed. And then below that support, I've got 37.54 and 37.12. And as you can see on Friday, that S1 level worked really well, and it was a great level. So good support level. And then we're going to move on to NASDAQ. And again, I'm going to look at the daily first. So just as a reminder, I've got 13,583 as resistance, but then much lower down, I've got 12,148 and 11,766 based on those trend lines. Support at 10,942 and 10,659. Now, with the NASDAQ 30 minutes, I've also left the pivots on there so you can see how the market reacted to them on Friday. Again, if you're not into pivots, perhaps you should be. You can always reach out. I'm happy to do a session on pivot points, how to use them professionally and efficiently. And as you can see, it came down on Friday. It touched that S1 beautifully, bounced away from that, and look how high it went from there. So on the 30 minutes, I've got resistance at 11,390 and 11,385. And I've got support at 11,292 and 10,935. The Russell, just remember these are small and mid-cap stocks. I've got resistance at 1782 and support at 1679. On the 30-minute, I've got resistance at 1767, 1754, 1751, support at 1743 and at 1720. So I'd expect to break out from those come Monday, or definitely next week for sure. You can always pause this and either take a screenshot or take a photo on your phone of this analysis just to sort of bear in mind for next week. Of course, with our daily newsletter that we provide, we give you new levels, we give you fresh levels each day. So, and of course the pivots, fresh daily pivots each day. So, if you haven't signed up already, then do so. Details are on the last slide. So moving on to a couple of the currencies. So cable, obviously, this week has been political chaos in the UK, and investors are very wary of the UK at the moment, and who can blame them? The big question's going to be, is it going to be Sunak or Boris? And of course, whatever, you can expect another volatile week for the pound. So on the daily, I've got resistance at 115.15. I've got resistance at 113.33, with support at 1.0772. Got a little downtrend there, which probably is sort of merited at the moment, considering the disaster we're having in the UK. Resistance on the 30-minute, I've got 113.51, and then the second one sort of is in line with the daily, which is at 113.32. I've got a better support line though at 110.42. When we look at the euro, again, you know, things aren't so rosy in Europe at the moment. And of course, we've got the ECB meeting this week where emphasis on I am expecting a 75 basis point rate hike. And again, on Friday, you know, we've got resistance at 0.9941 and support on the daily at 0.9716. On the 30-minute, I've got a resistance line just above, not too far above where it closed, at 0.9912. I've got support at 0.9805, support at 0.9798. And also I've added in the pivot points on a fresh chart for you here so that you can see how well that S2 held on Friday and the opportunities it gave. You know, if you follow that for Friday, that last part of the chart, we rallied up and we hit the we hit the pivot point level, that solid blue line. We dropped down to S2 and then we bounced all the way through and made it through R1, and we closed midpoint between R1 and R2 really. So again, you know, just emphasis on these pivot points. If you're not using them, you know, they've been used by pro traders for absolute decades. Bitcoin daily, you know, Bitcoin just seems to almost become the most stable asset class of all of them at the moment. It's just ranging. I mean, just look at that. And so I've got resistance at 25.70 and support at 18.445. And of course, emphasis, it's ranging at the moment, but obviously it's not going to stay there forever. And then when we look at the 30-minute, I've seen some levels, 19.340 resistance, 19.245 resistance, and 18.910 support. Now, you know, this sort of demonstrates the difference between the stocks and Bitcoin at the moment. You know, you can see pretty much, okay, yeah, there's a range there, but it's sort of, it's just moving side to side when you look at the red one, which is Bitcoin. Whereas when you look at the stocks, it's all over the place. It's much more volatile. So for me, you know, I wouldn't say at the moment the correlation is holding very well. And, you know, it's a loose relationship anyway, but it seems even looser at the moment. You know, as I say, Bitcoin seems the more stable of the two. Moving on to commodities with gold. On the daily, I've got this downtrend line that I've added, resistance at 1702, support at 1589. Moving on to the 30-minute, again, I've left the pivots on there. We've got resistance at 1663 and support at 1657 and 1623. So very tight, so expect to break out from that for sure. You know, gold's been volatile. Just look at the range on Friday. You know, it dropped all the way down to test S1 and then bounced all the way up to test R2. So, you know, both ends of the levels there for 4 out of the 5 pivot levels. Okay, and then finally, we move on to WTI. Now, you know, I mentioned earlier, if you've watched all of my YouTube, the macro part as well, Biden's releasing 15 million barrels to try and push the oil prices lower because he's got these midterm elections coming up. And he wants to try and get inflation down. He wants to try and get gasoline prices lower. But, you know, voters aren't going to ignore inflation. So, you know, there's the potential that he could lose control of both the houses, if not at least one of them. And of course, it seems to me, and I'm pretty sure, that he's very anti-fracking as well. And of course, that reduces the supply that the US have available. You know, I mean, before fracking, I mean, the US was quite a substantial importer of oil. After the fracking industry really took off in the States, they've become a net exporter. And if things had continued the way they were going, they could have possibly even challenged the Saudis as the #1 exporter. You know, correct me if I'm wrong there, but that's the way I see it. But of course, if you sort of control that fracking and you won't allow so much, you know, it is controversial. So I can understand part of that. But, you know, it is perhaps having a little bit of a push on the prices. You know, he announced that he's going to add more these 15 million barrels, and of course the oil price went up rather than down. So what does that tell you? Okay, so moving on to resistance levels: 95.98 and 89.73 for resistance. Support on the daily at 79.37. So yeah, very wide. But them up now with 30 minutes. I've got 86.28 as a resistance level, 83.82 as support, and 82.33 as support. Now, please remember that my analysis is based on futures. You know, trading futures is much more accessible these days than most people think. You know, the CME, they've got their micro and their mini contracts to help to cater for those investors and traders that have got smaller capital amounts to risk. And of course, you know, if you want more information on that, just let me know, or just go onto the websites of some of these exchanges. Okay, so just moving on to obviously do a little bit of insight into what we provide in the way of services. So obviously we provide this each week to help prepare you for the week ahead. We've got a daily newsletter which includes all the global news, my up-to-date views, along with up-to-date chart levels and fresh pivot point levels. We provide one-day workshops to help you to improve any areas where you would like to. And obviously we do one trading for beginners as well, for those that are fresh, looking to enter the market, so that we can help them to understand the right way to get into trading. And then we do 1 week intensive courses to help people go from zero to hero. Really, sort of by the end of that week, you feel comfortable with making some decisions so that you can start your trading journey. And then if you want that sort of full blown on, you know, turn it into a career style course, then we do our master classes, which include 4 weeks of guided learning. They don't have to all be taken consecutively. You can split them up so that you can practice in between, which you'll be surprised, it really accelerates the learning curve. And then trader mentoring, you know, maybe you're doing okay, but you would like to reach that next level. I can certainly help you with that. We consult to companies to help them manage their exposure to currencies, commodities, and such like. And of course, we provide trader education to individuals. We also provide content to exchanges and to brokers. And you know, as usual, feel free to reach out to us at info@symaxfintech.com, or if you've got any trading questions that you would like to aim directly at me, then my details are there, chris.tubby@symax-fintech.com. And all it says, last of all, for me, is have a great week. Really look forward to the ECB meeting. Just remember, lots of data out this week, so you're going to see market moves. Markets are volatile. We're in the last quarter now, so we're in the home run. We've got those sort of geopolitical issues going on, Russia's invasion of Ukraine, the UK politics absolutely in chaos. And then on top of that, we've got the US midterm elections coming up early next month. So, as I say, have a great week, and I look forward to seeing you next week. Bye for now.